also from a risk management due diligence perspective, it was a challenge. And that's now the very good thing that we see new well-established or highly well-governed offerings in the market, like RULEMATCH, a new exchange in Switzerland for institutions. That's a great development and will help not only us as market participants, but the whole market to evolve further and get more mature.
Hello and welcome to another episode of RULEMATCH Spot On, the only podcast focused exclusively on the institutional crypto and digital asset industry. I'm your host, Ian Simpson, and if you want to know what banks, hedge funds, asset managers, and others are doing in crypto and how they're doing it, this is the place for you. My guest today is Florian Marty. He is head of blockchain solutions at Bank Vontobel here in Switzerland. Like many of our podcast guests, Vontobel has been very early in the crypto space, but with a special focus, having launched a Bitcoin tracker certificate already back in 2016. Florian, welcome to RULEMATCH Spot On.
Thank you, Ian, for having me. It's a great pleasure.
So in Switzerland, we have quite a few quote-unquote pioneers in the crypto space, financial institutions, banks that have been early in the space. We've had quite a few of them on the podcast already. That includes Vontobel, but there the story is a little bit special. Can you just kind of give us a summary of the background of Vontobel's move into crypto already quite a few years ago, right?
Yes, very happy to do so. Our journey started back in 2016 when we launched our first tracker certificate on Bitcoin. Shortly after that, a tracker on ETH as well. And for that, you had to manage the risk positions. You had to buy and sell cryptos directly. So meaning we had to establish connections to the various exchanges, crypto exchanges, but also then build up a custody solution. And with the success of the products, you also had to look into all the risk and then mitigate the risks, including cold storage solutions, etc. From there, I would say this kept us busy for a while. We also looked into the technology, the DLT side of things, and started playing around, learning. We tokenized our first structured product back in 2019. We launched or tested together with CMTA and other market participants a settlement token. And then since 2022, we also have for our private clients direct investment solutions, meaning they can trade Bitcoin and ETH directly through us.
Mm-hmm. So that's quite a track record already. Congratulations on that, of course. But just going back to what you said about building those things up, you mentioned cold storage. You didn't mention, but I assume that's part of it, routing orders for these sophisticated products, right? All of that was built in-house. That's quite a thing for a Swiss private bank to do all of that development in-house, right?
We built it in-house because there was no turnkey solutions available in the market at that time. And yes, we built it on our own, of course, together with service providers, software service providers, and had to learn a lot in that period.
And those things that you built, you said weren't in the market, of course, already. Weren't things that other people had been working on also in that space. So really Vontobel was at the forefront of developing that, huh?
I would say so. At least certain components, yes. I think our smart order router wasn't able to handle crypto at that time. Connectivity to the exchanges was completely new. Even though from a technology perspective, it's similar to what we know, and that's why we were able to ramp that offering up in a shorter time.
Mm-hmm. And of course, the value of that is obvious, or maybe you want to go into that as well. What components were needed for the tracker certificate, just to help people who maybe aren't so familiar with the sophisticated financial products that have been built on crypto by Vontobel and now others? The value is obvious. The challenges, can you go just a bit deeper into the challenges of putting those pieces together, what wasn't there, what you had to invent or develop along the way?
Well, basically everything. Mm-hmm. So the product was the wrapper. I mean, a structured product. That's our DNA at Vontobel, and we always tried to bring new investment topics and new investment themes to the investor, make that new topic investable in an easy way, and then yes, it's the bank that covers all the rest. And here. For the tracker certificates, yes, you had to buy and sell crypto. So you had to establish the connectivity to exchanges. You had to look for good prices, liquidity, etc. But then also to custody the cryptos on your side, on your own balance sheet. So yes, you had to build a custody solution. Sounds strange today to say, oh, well, there was no costly solution available, but that was reality back at that time. And then we established, build up the costly solution together with a software provider. So it was really doing smaller steps, learning together with the software provider to be able to build up the costly solution on our side. And so just on the trading side, right, you mentioned connections to exchanges. We know kind of how crypto got started with retail exchanges, very, very popular and many people in that space. But there wasn't really something built just for institutions where you could really plug and play, just like plugging into NASDAQ or to SIX in that sense, right? That was a bit of a challenge. Absolutely. All, I would say, unregulated, unknown entities.
On Coconut Island somewhere.
Exactly.
Potentially.
Fancy jurisdictions, most of them. So it was also from a risk management due diligence perspective, it was a challenge. And that's now the very good thing that we see new well-established or highly well-governed offerings in the market, like RULEMATCH, a new exchange in Switzerland for institutions. That's a great development and will help not only us as market participants, but the whole market to evolve further and get more mature.
And you mentioned that this was another structured product. Of course, we know, or maybe some of our listeners and viewers don't know Vontobel's history in the structured product space, but this was another product that you were bringing out. So not really a strategic decision necessarily, but just common sense in one sense.
Correct. So structured products are our DNA, and we look every day into new topics, new themes that we can bring to the investor in a very easy way. Trading a structured product for a client is super simple. In particular, if it's a exchange-traded product, so they can trade it through their brokers or a custody bank in a very easy way. And then all the complex things, like back in 2016, trading crypto was a real challenge. Just to open up a wallet, then transfer fiat to the exchange, trading, and then handling all the security side of things was a challenge, and even today is still relatively complex.
Not just like pushing the button in some other markets, equities and so on.
Correct.
Yeah.
And with a structured product, it's like trading an equity or a bond.
And so the complexity of operations then has a few extra layers because of crypto. You mentioned risk management at one point. That also is very, very important, not just about the asset and its volatility, which people talk about a lot, but then also the counterparties. If you're actively trading these things, you're worried about counterparty risk, you're worried about capital efficiency and so on. How did you think about that, and how do you manage that?
Well, on the one hand, yes, managing liquidity, availability of cash, also to trade then the crypto is still a challenge. So within Vontobel, we have a team covering that, looking that we have enough liquidity on both sides, on the different exchanges, in order to be able to react to some inflows or outflows in our certificates. And then capital efficiency is it's a very difficult topic, because crypto positions on a bank's balance sheet are super capital intense. So our regulator asks to cover these positions with a lot of capital, meaning every bank today has a certain limit in holding on balance sheet positions.
And when you are working with counterparties, at least at the beginning, shall we say, who are new and not necessarily at the same regulatory level as some other market participants in equities and bonds and so on, then you have even more risk limits and different things that you have to manage and split things up. That makes a...
Absolutely. So you have then much lower exposure limits to a certain counterparty, meaning if you have to trade bigger volumes, you have to interact more often. So splitting trades multiple times. So just not being able to send one amount to an exchange, but have to split it 4 or 5 times, and then split it and cover it throughout the day.
Is quite a challenge. And then
operationally, it's a challenge.
Yeah, of course. And then on top of that, as we know, most so-called crypto exchanges have been using the pre-funded model. So you send in first. There's no kind of T+1 or T+2 settlement that can help with capital efficiency, right? So another layer of complexity on top.
Absolutely. And still something we see in the market. So most of the exchanges still work in that model. And here, I think also RULEMATCH brings in a very attractive solution to all institutional market participants.
So that joint venture comes together to expand and lay the foundation for even more things that can come in the future.
Yes, so the idea of this new company is not only to issue tracker certificates with one underlying, but also then extend the offering towards basket products and bringing new topics so that we see a much broader offering than what we on Vontobel side were able to provide, and the much more than the other partners were able to provide and bring to the market.
We'll get maybe to the overall theme of the financialization of crypto, because that's a point that's very interesting right now, as institutional adoption has really kicked into high gear. But just going back to Vontobel, you had the tracker certificate in Bitcoin at the beginning. I have a colleague actually who was working at another big bank back in the day, wanted to do the same thing, went off to Paris to the headquarters to make a presentation about that, and said presentation lasted about 5 minutes. In other words, didn't go anywhere. But so how have the products and the way you're doing the products at Vontobel developed over time? That was simple at the beginning, and you have more and more sophisticated things coming up?
Well, we started with the very simple tracker certificate, and this kept us busy for a while. The product evolved over time a little, because shortly after the launch, a couple of years into the business, we had to increase the management fee, for example, for this product, because we learned over time how expensive the capital side was. So even the regulatory part was moving. So yes, we had to increase the management fee just to cover these costs. So that's another reason why we believe having enough balance sheet solution is also interesting for the investor side, because they are more efficient and cheaper, and hopefully with a clear and transparent governance structure, also very interesting from a risk perspective compared to all the other offerings in the market. I mean, there are a lot of offerings available there, but with very different setups and governance structures.
Mm-hmm. And when that was launched, 2016, I mean, that was also a pretty hot time for crypto as well. And then the next year into 2017, what was kind of the investor appetite and response to that at the very beginning?
It wasn't the blockbuster product from day one on, so it took a while to get established. And then, but I think that was a very big advantage for us, that we were already in the market, that the product was already available on the exchange when then the momentum picked up.
Right.
And then
the next year,
investors started trading our products, and with that, you get up in the ranking on the exchange statistics. That brings in new investors, because a lot of investors they look at
the
also
ranking.
Exactly. They check the top 10 products and see where is the flow going. Okay, probably that's a good offering, right?
Yeah.
So following the herd.
Yeah.
And this was the big advantage. So sometimes you need to invest not when the client demand is the highest, but to anticipate the client demand.
Mm-hmm. And of course, now over time we have other crypto products. You alluded to that. There are ETPs. There are different things on also a whole range of crypto assets here in Switzerland, in Europe. The big news in the US, Bitcoin spot ETFs that came out and have seen huge demand. How has that kind of affected your offering or not? Or how does that kind of compare, contrast?
It was very positive overall, because it generated, again, some traction in the market. We just came out of this, I don't know, third crypto winter with that announcement. So it was a clear turnaround moment, tipping point, where client demand increased again, I think, across the whole crypto market. From that perspective, it was very positive. Yes, it is a alternative solution to our Vontobel issued tracker certificates, but again, it's a different offering. It's a different wrapper. It's a different risk profile. It's approved in other jurisdictions, so there are still some very important distinguishing factors within the product. So we saw more demand, and that was great.
A rising tide lifts all boats, as they say sometimes.
Absolutely.
Yeah. And I can imagine the general profile of an investor at Vontobel is a bit more sophisticated, also knowing Vontobel for these structured products with a whole range of things that are out there. Therefore, they are looking for that, as you said, that setup, different risk profile, and potentially more things, interesting things in the future. Would that be correct to say?
I would say we have two clients. We have, on the one hand, we have our private clients that we custody with us. And then we have basically all the other clients trading on the exchange through their house bank or broker accounts. So on our private client side, I think we have a rather conservative client segment. So they are looking into diversification. They want to have a diversified portfolio, and yes, some of them started looking into the crypto topic for a additional yield generating component. But it wasn't that the high risk takers, the gamblers, the high frequency traders. These are not our clients that we custody with us.
Sure.
So these clients are rather conservative, I would say, from a risk perspective. So they want to trade the tokens in above the top 20 from a market cap perspective. They look for the most important ones. These days, it's still Bitcoin, ETH, and then we see almost no client demand for all the others, even though, yes, there are a decent market dynamic. But from a client perspective, yes, focus is still on Bitcoin and ETH, and it's just to add another yield component. So we're talking here about investments of 1 to 2% of their asset allocation into crypto to the max. And yes, there are always exceptions. So we also have clients investing much more. But on a broader scale, I would say that this is the big picture.
Kind of a theme that sometimes happens in banks and other big banks around here, whose name we'll not mention, is kind of this back and forth between the private banking, the investment banking kind of setups, and sometimes there's considerations for client and client flows and products and so on. Vontobel seems to have balanced that pretty well when it comes to the crypto products, or is there more interest, more push from one side or the other?
Well, from sitting within the product factory side, myself, our wealth management, our private client segment is just one very important client to us. So we listen to the client very with high attention and try to bring new features, new products on their demand. But on the other hand, yes, we also have the public, all our publicly distributed products in the market, and we listen to that side as well. So we have a lot of input for our product development side. Yes.
And going back to what you mentioned before, kind of setting things up for expansion with the off-balance sheet setup with the other companies, looking forward. Also internationally, right? Vontobel is not just in Switzerland, so you have things there out in different places. One topic that is on everybody's minds is Europe and MiCAR, the regulation there. How is Vontobel thinking about that and preparing for that on the crypto side?
Well, overall, we think MiCAR is a good thing because it clarifies things and increases the quality of the service provider, especially with a custody license that is required for crypto in Germany. And this is one of the reasons why, together with the other joint venture partners, we decided to establish the joint venture in Germany so that we can leverage this very high quality legal requirements or regulatory requirements, to say, for the offering, which we do not yet have in Switzerland. So I think, you always can see regulation from two sides, right?
Sure.
So it increases the hurdle. But on the other hand, I think, especially as a regulated institution, it's a plus for us.
And it probably pays to have a global perspective on things, since being in just one jurisdiction is somewhat of a restriction, right? Whether it's the regulatory side or just the size of the market.
Yes and no. Because having so fragmented regulatory requirements across the globe increases the challenge to establish one offering to distribute the same product in different jurisdictions, because you have to look into each and every jurisdiction separately. So that's, for example, also a challenge for the custody execution offering for our private clients, so that you say, okay, we have a very good understanding how things are regulated here in Switzerland. So yes, for Swiss domiciled clients, it's super straightforward. But when it comes then to other jurisdictions, you have to look into how is crypto regulated or not regulated in the additional jurisdictions, and then also consider cross-border aspects. So make things very complex. As the whole industry is, right?
Of course, and that is, shall we say, the downside of the financial industry and things like that. Very, in some areas very rigid and strict, right? But that's the game, right? That leads me to the topic of the financialization of crypto. In other words, crypto in financial products and ETPs and the certificates and potentially more sophisticated things going forward. Some people say that is a bad thing, since crypto was supposed to be totally different and totally separate. Other people say, well, now it's investable for many more people. How do you think about it, either from the Vontobel perspective or personally?
To me personally, there are two views on the crypto topic. On the one hand, the investment side, and that's the topic we mostly covered in this conversation. So yes, make this investable through our established products, ETFs, ETPs, structured products, whatever. And on the other hand, you have the technology, DLT. And this is a complete other pair of shoes, where we as a financial industry are looking into it, but it's still a very long journey to really being able to leverage the potential synergies that come with the new technology.
So we have now these products out there, right? And we have crypto assets like Bitcoin and Ether especially that are very well established. You would then expect with other assets to see a very active borrowing and lending market develop, things that help to leverage, assets that don't just sit somewhere in cold storage but earn a yield and so on. I assume that's something that you or clients think about as well, right?
Yes, currently the different tokens have very interesting functionalities. You mentioned yield. Staking is very interesting. So we have a lot of ideas what we could bring to the market as additional feature within structured products, within ETPs. But again, I think this is then something that we will not cover on our own, but in the joint venture company going forward. And yes, it is a new investment solution, but again, I think it is from taking one step back. If you're a wealthy client, yes, you want to diversify, and it will remain that way on the long run. So yes, crypto is a new investment topic. Whether it's an asset class or not, I'm not so sure, but at least it's a new investment topic, like a new share popping up, right? You want to invest, you want to profit from that development, and I think we will continue to see that. What is very funny is that actually the intention of the different protocols was completely different. So if you read the white paper about Bitcoin, it wasn't intended to be a store of value. It was intended to be a payment token, right, and make banks redundant. So
hasn't exactly happened yet.
Luckily, I have to say.
For sure. And of course, there's many things. There was a period, what we call DeFi summer in the past, when DeFi was very, very interesting. Someone was telling the story recently about in a financial institution or in a fintech company looking at Celsius a couple of years ago. Very interesting product, promised great yields, very, very super fantastic, hot. Everybody was into it. but then went down into the details a little bit, due diligence, and realized that something doesn't sound quite right. It's too good to be true. So you do have to really look closely at these things, right?
Well, you mentioned DeFi. DeFi is in a very interesting space, but as a regulated entity, very difficult to enter. As a regulated entity, you always take with you your regulatory requirements and obligations to be fulfilled. And in an unregulated space, it's almost impossible to do certain things because your counterparty is not acting the same way and fulfilling the same requirements. So today, it's still very difficult for a regulated entity to participate in this space. But somehow we will have to find ways to somehow contribute to that or then bridge between the two worlds, right? That we are, as a bank or financial institution, the gatekeeper then between the regulated, the well-established part, the business we know today, and the not yet regulated or unregulated DeFi space.
I suppose there's maybe two aspects of that, right? One would be, potentially taking things in the DeFi space and somehow wrapping them into a structured product or some kind of a financial product, which requires some imagination and quite a lot of regulatory hurdles and jumping through hoops. On the other hand, some people talk about even regulated DeFi, where you are really leveraging DLT or blockchain to do DeFi-like things with different kinds of collateral, different kinds of asset flows, and so on and so forth. Is that something you think could be a possibility in the future?
I think DLT has a huge potential for the financial industry. But the challenge is to leverage the synergies out of this new technology, because we have our current systems, our current processes, and whenever you bring in new technology, it doesn't really make sense as an individual product provider or service provider to apply the new technology with all the others using it. So, for example, we tokenized our first structured product back in 2019. We learned a lot and saw all the benefits that we could tap into through the value chain, be it settlement, reconciliation, collateral management. But to get there, the investment is huge and would also require that both sides or the whole value chain will apply and use this protocol, this technology, from custody provider to brokers, exchanges, and only then you can really leverage the synergies. So to get there, we're talking about multiple years of infrastructure investments, building up processes, and that is very difficult to get the commitment for, right? And align all stakeholders across multiple institutions. And that's, we see very interesting developments in this space. So now very big houses that started using DLT as technology and building a ecosystem. And one day probably also the smaller institutions like Vontobel will be able to apply it, but it's very difficult as a single player to establish a new market standard, right?
For sure. It takes an orchestration of, as you say, many institutions, many people all together. Just going back to that tokenized structured product, can we double click on that? Tell us some things you learned, some of the challenges, what happened, or what did it look like? As far as you can say.
It was a simple step, I would say, yes, because a structured product by nature is kind of a smart contract, right? So everybody thinks, well, then the token is actually the even better wrapper. And yes, it is. You can automate a lot of things into the smart contract. But again, the benefits are not that close. So leveraging the synergies out of this new technology are relatively far away and require that all the market participants are working together and agree on the same protocol, the same standards and the same processes. And then one would have to switch all the products, right? And update all the interfaces from all the systems that you have within your institution to talk to the blockchain. And then we're again talking about huge investments, and this would mean that you have to run both technology for a longer time in parallel, the new DLT technology and the old, because you won't be able to switch from one specific day or all the products from one to the other technology. The market will not do that. So finding the right way how we can slice and dice the whole big elephant so that we already profit from the new technology step by step is very important and probably the only way how we can establish the new technology. And so far, I think the whole market haven't found a solution yet.
And that product was something you did only yourselves at Vontobel, just internally, or was it also?
It was like really a POC just to see, okay, how simple is it? What is it required, and what could it bring? And yes, we learned a lot and see the benefits. But again, it's very difficult to leverage the synergies.
So it never actually went live and
no.
to clients.
No, and we haven't further established the product. I think yes, we still lack exchanges then where we can trade this product, right? We slowly but surely see market players entering and also looking into tokenized assets, not only Bitcoin and ETH for trading, but also all the others. And this is a very good development. And yes, I strongly believe that the technology will be applied by the industry over time, but it's still a very long journey.
Yeah. At the same time, we have players like BlackRock and some others who are tokenizing funds and things like that. Some people make the point that it takes a really huge player, not necessarily government or regulator, but huge player with that market size to kickstart things and then get the ball rolling, and then maybe competition, FOMO kicks in and people have to catch up. Would you share that perspective? Or
I would totally agree. Because if it's a small market participant that says, hey, I have the solution, be it for whatever asset class, all the others will not apply and use it. But if it's a big or one of the biggest players that says, okay, this is the new standard, we require you to use this standard because otherwise we won't interact with you anymore, then it really
moves pretty quick.
The coin flips, right? And then it's the new standard. Whether it's the best or not, that doesn't really matter. The most important thing is that we start using the same standards, and whether it's BlackRock or JP Morgan, Citi, UBS, whoever it is, but I think the big ones need to participate, otherwise things will not move ahead.
And just looking around in the space, whether it's in Switzerland or in Europe, other tokenized things, some things have come to market, are available to trade. Is there anything that is interesting from your perspective, or things that your clients are looking at, wanting, asking for, that you would consider as the next thing we should look at and develop, or not yet?
Honestly, not yet, unfortunately, I have to say. So yes, tokenization is probably on all institutions' wish list or priority lists, topics that they look into. but just tokenizing a asset in investment solutions, shares, bonds, funds, structured products, or even real world assets will not bring the benefits. So we need to have efficient means of payment as well to trade this investments, these tokens, meaning, yes, we, for example, will still lack a tokenized Swiss franc, another very important puzzle piece. Yes, the industry, the market is working on it. So we have our national bank working on wholesale CBDC project. We have a project where we also contribute from the Swiss Bankers Association for a deposit token. All very good developments, slow developments, unfortunately. But another puzzle piece that is required so that the ecosystem can work, a puzzle piece that will allow us to then really leverage the synergies out of the DLT technology, right? And so, yes, the cash leg is just one other. Then we have infrastructure like exchanges that are required, like RULEMATCH, well-governed exchanges that then trade all these assets that bring all the different market participants together, because otherwise it won't work.
You can't do it by yourself. As much as you might want to, as much as you might be a pioneer, to say it takes a village to put it all together.
That's absolutely correct, yeah.
And just as we kind of come to the close, looking into the crystal ball, is there anything that you are really looking forward to or really excited about, or on the other hand, quite worried about when it comes to the crypto industry, thinking about institutions, something that could be a real accelerator or something that could be a real slow things down? Some people say the elections in the US could have a very strong effect to the upside, but what's your perspective?
Personally, I hope that things will continue to accelerate, driven by different factors. Yes, the election in the US is one. It will probably give the industry another priority across a lot of jurisdictions, and that's good. Whether then the regulation will in the US and the developments in the US will help all the other jurisdictions as well, not so sure. If they really stick to America's first, well,
could be a problem.
Could be a problem. But in general, I would say yes, it's a good thing, and will also clarify and help other regulators to align, because it's like the big service providers, the big banks, right? On the regulation side, it's very similar. So once the big regulators, the US, decides it's A or B, well, most of the others will follow.
Yeah, it's a mass. It's a certain critical mass, so to say, that can move things forward. And anything that you think could be a potential blocker or slow things down, or something that you are carefully considering as a risk in the space?
Well, the risk is that we lose again the momentum, being too slow, and then we lose the traction that we have right now. I think the dynamic is very interesting, very helpful, and we have to keep things going. Then we all together, the whole industry will profit from that. Very, very good. Florian Marty, thank you very much for joining us today, and great to see how far Vontobel has come in the space, and I'm sure you will be helping to push things forward even more. Maybe we catch up again in 6 or 9 months to see how things have developed. Would be a pleasure to do so, and thank you very much for having me.